Hi guys, it's Ian and this is your weekly market wrap-up video. It is Friday the 18th of April 2025, just coming up to 12:30 in the UK. Today it's a bank holiday and then obviously we've got Easter Monday, so a long weekend for most people. The foreign exchange markets are open today along with some stock indices. Commodity markets are closed. There is a lack of liquidity. That does mean that if we get news bombs in markets, then we can see quite aggressive moves. But at the moment, we're just seeing periods of consolidation, and that has basically been the story for this week. So we saw aggressive moves in the markets, both when Trump initiated the tariffs and then highlighted that he's going to delay tariffs. What we're seeing now is the market not quite sure what to do, to be perfectly honest. We're seeing a lot of inside candles. When we look at larger time frames, which we will do in this video report, we're seeing consolidation sometimes in the lower quarter of last week's strong candles, and that just highlights that we're going nowhere. It highlights that the markets just don't know what to do at the moment, and they're waiting for the next news bomb, if you like. So what we're going to do today is we're going to start off with DXY, which is the dollar index. We'll then look at the majors and what I believe is happening, and then we're going to finish off with Euro Swiss. I've had an intraday signal today, so my system setup, we do separate videos for those, but the system setup this morning did highlight a buy signal in Euro Swiss, and I've got a pattern, but I'm just wondering how strong that signal is with it being a low liquidity day and obviously a bank holiday. But we'll get to that chart. So let's get to the chart. So basically, to highlight what we've got here, this is the trading view layout. We've got a monthly chart, bottom, middle, then weekly, daily, 8 hour, 4 hour and 2 hour on the bottom right hand side. And this is a perfect chart really to highlight what we were just previously talking about. So obviously this weekly chart highlights an aggressive move to the downside, and then all of this week we've stayed within not just the lower half but probably the lower third of last week's bearish candle, and this just highlights indecision. It makes intraday trading difficult, okay, unless you're really systematic and you've got something that puts you in and out of trades. Be very strong with your stop losses. That's all I will say in this period of uncertainty. So we're seeing this aggressive move to the downside, and then we're seeing this period of consolidation. Elliott Wave enthusiasts are probably looking at this as a 5-wave count, so wave 1, wave 2, wave 3, wave 4, wave 5. What we can definitely see here is more red candles than green candles. In fact, since posting this swing high, which was in January, we've actually only seen 3 weeks of bullish sentiment, and that last third week was limited. So at the moment it's still looking very negative for DXY. And if we go to this time frame, and this is the 2 hour time frame, we can see the last move lower hitting the 261.8% fib level. That was at 98.66. Again, what we'd normally expect after the completion of an Elliott Wave, especially when it's nearly pit perfect with the 261.8% extension, we'd expect a 3-wave correction to the upside. All we've seen is these inside days. So the inside days on the daily chart, they're resulting in this period of consolidation. Now, there's 2 ways to look at this period of consolidation, and at the moment they're both bearish. Okay, it can be seen as a symmetrical triangle formation. That's also known as a flag or a pennant. That has a bias to break to the downside. So if we look to this tool here, sometimes I just use the arrow, on a clear break of the base, and the measured move target is all the way down here. So basically what we do is take the flagpole to the swing low. We then have a look at the first swing high or the consolidation period, and then we project that to the downside, and that's all the way down around about 95.96. What else can be seen on this time frame and in this index? And the reason why I concentrate so hard on DXY is because it is the dollar index and it drives so many other different products. Okay, it's correlated obviously with euro dollar, dollar Swiss, dollar yen, but it's also correlated mildly with oil, and then obviously nearly -1 correlated with gold. So it's really important that we get a view, if you like, on DXY before we look at other products. So this period of consolidation, it can also be seen as a Wyckoff accumulation zone. So what that dictates is that smart money is accumulating volume here, and what will normally happen is that we'll get a breakout to the downside, maybe not down towards that flag formation, and then it will basically, smart money, SMC, smart money concept, will take out lots of loose stop losses here. So novices or traders that have decided that DXY is going to turn have basically taken long positions because they've seen this 1, 2, 3, 4, 5. They believe we're going to see a correction to the upside. They're taking long trades in here somewhere. Where's the obvious place to place a stop loss? Or below this accumulation zone. So what has a tendency to happen is we get a spike to the downside, normally on high volume, and then buyers return, wipe out the stop losses, and then drive this index or the dollar again to the upside. So at the moment, the bias is still bearish. At the moment, I'd still look to sell into rallies. I think sort of prime short entries going into sort of Monday, and there will be slightly higher liquidity on Monday, will be around about 99.60, and then you've got a possibility for that spike lower to take out short stop losses. So reflecting that back onto euro dollar, and it's virtually a mirror image of the DXY of the dollar index. I think euro against the US dollar is about 60% of DXY at the moment. I might be wrong, might be slightly more, slightly less, but obviously a dominating factor within that dollar index. And again, all we're seeing here is inside days on the daily chart. All that's producing is a symmetrical triangle formation or a Wyckoff distribution zone. So it's accumulation at the bottom, distribution at the top. Same thing is expected to happen, is the fact that you get this spike higher. What will sometimes happen, and I just want to show you this because it's a great tool. If you are going to take long trades, it's a great tool to basically highlight what can be the spike higher or the spike top. And what we do is we put an extension tool on this swing, and then we put an extension tool on this swing, and these are known as cipher patterns. Okay, and when we get them and they're close together, it highlights confluence, and confluence areas attract price action. Okay, and often we will get a reversal at these levels. So consolidation, and then what we've actually got here, and I'm glad I've done this video because it's the first time I've actually noticed this, is the completion of a crab formation at 1.1610. So again, mirror image of DXY completing the back formation near around 1.1610, and then that move to the downside. So I'm going to move through these other products a little bit quicker because those are the two dominating asset classes, or assets if you like, that I'm looking at going into next week, and a lot of these different products are just a mirror image of what we've talked about. So again, not really got a pattern on cable. We are getting inside days. I also look at some indicators called DMARC indicators, and what that suggested or suggests at the moment it's on a 6-hour candle. And again, I'm not sure if we're going to get this system set up on a bank holiday because of low liquidity. But what it is suggesting is that the spike higher gets refused and then we get a move lower. But what will probably happen here, instead of that completion, is something like this. So we end up getting a head and shoulders formation. So again, a period of consolidation. This can be seen as a Wyckoff distribution zone. Spikes higher, takes out stop losses, comes lower. A lot of novice traders see a reversal in sentiment. They take long trades around here, then panic all the way up as it forms a right shoulder, and then actually get a break of the neckline, and then it moves to the downside. So at the moment, accumulation, the system setup suggests selling into spikes, but I doubt I'm going to get my trade set up in today's market. Looked at this one on Friday. We sent out a report for this on Friday. Consolidation, but instead of consolidation, sideways consolidation, which causes flag formations or pennants, what we've got here is we've got consolidation but to the downside. What this highlights is that basically sellers are losing control of this downward trend, and we're getting lower lows and lower highs. I know for a fact, even without, and I don't use this oscillator very often, but if I put the RSI on here, you know, we're going to get some mild divergence. So basically this shows that although the market is continuing to make lower lows and lower highs, it's losing momentum. Okay, it's momentum that drives market. Momentum and sentiment drive the market. So basically an ending wedge. We noted this dip, if you like. I mean, it's pretty obvious. It was also a demand zone from September 18 of last year, quite a deep demand zone. What happened is we moved into that, probably swept up some liquidity, and then looking to break to the upside. 142.03 was support. It did clip there on Thursday, and we saw a move higher. I think probably what's going to happen here, thinking about the pod power of DXY, is that we will probably come down to the trendline support, which is at the moment it's located around about 141.43. The measured move target on a breakout is 144.08. Why do I say that we will probably see a new lower low? Because wedge formations that are properly formed and have strength normally will hit the trend line 3 times. Now I know we've got a double hit here. We could sort of say we've got a double hit there, so we could say that, you know, this is it's already made those 3 touches of the trend line. But if I put it up to an 8 hour, and this is where technical analysis gets a bit not fluffy, but you know, what some people can see one thing and other people can see something else. If I put it up to an 8 hour chart, it's just 2 touches in those candles. So, you know, if you're looking at a higher time frame, you're going to say, well, at least it's going to drop lower. If I turn this into a 120 chart or a 3 hour chart or a 2 hour chart or a 1 hour chart, we're going to see more touches, and then we're going to say that it's actually, you know, hit its requirement. So I would be wary of a move down towards 141.43 trend line touch before we see a breakout. And the reason why I quite like that setup is because I'm also bullish on US indices. And I'm going to talk about those now. Gold, we're just sitting at all-time highs. There is just sitting at all-time highs. We're sitting at all-time highs. Markets are closed today. We're in a bullish channel formation. What I'd like to see is a spike through the previous swing high, then a reversal formation, and then to come down. So again, you know, let's not try and pick tops and bottoms. Let's pick these right shoulders. The Dow Jones, we will complete a back formation. That is around 38,730. Looking at big picture analysis, it suggests that this will be the completion of a second wave, and that we'll then move higher to form the crab pattern close to 46,386. A similar pattern is also forming on the NASDAQ 100. So a bullish bias. We noted last week that we had to get above 18,817 to continue that bias. I think all we're seeing here is inside soldiers on the daily chart. They highlight indecision. We really need some positive momentum to drive this index higher. So talking about positive momentum, and I said that we'd finish with the euro against the Swiss franc, is this setup that I was seeing this morning. So and what has a tendency with euro Swiss is that if we get a build in risk sentiment, so if risk sentiment is positive, in other words, we're buying stock indices are moving to the upside, what will have a tendency to happen is that euro Swiss will also move higher. What we've got here is a wedge. We've broken out the wedge formation. That's got a measured move target of 0.9496. So that's giving us a minimum requirement for some upside pressure. We've got the crab pattern that completes between 0.9520 and 0.9526. I got this trigger this morning at 0.9299. As long as price stays above that level, then I remain positive on an intraday bias. But like I'm saying, this is a low liquidity day. Is it going to hold? It is a system setup, and at the moment we're just seeing consolidation. So just to highlight what we talked about in this video, we've seen aggressive moves in the market. We've seen a week of consolidation, inside days posted on a lot of asset classes, particularly dollar products. Wyckoff highlights that we should see a spike lower in DXY and then a move to the upside. That is mirrored with the euro against the US dollar, with that crab formation potentially on the 4-hour chart. With regards to US stock indices, the long-term bias is to the upside. I'd like to see a completion of that back formation in shorter time frames to then highlight a change in risk sentiment. Euro Swiss has posted a bullish trigger on the intraday chart. Okay guys, good luck, and I'll be back again next week with more video analysis.